The market is closed. SoFi Technologies Inc., SoFi, closed at $26.55 on Friday, September 12, 2025, after a trading session that saw a slight pullback in the final hours, a shift from the earlier upward momentum. The immediate narrative surrounding SoFi is one of impressive growth, a company that has not only achieved profitability, but has done so by consistently beating expectations. This is the story told by the headline numbers: record revenues, accelerating member and product growth, and a definitive move into the black. But the reality is more nuanced, and the true picture for SoFi stock performance requires a deeper look beyond the surface-level optimism. While investors are cheering the past, the underlying questions are about the future, specifically the sustainability of this growth and the potential for new revenue streams to overcome old challenges. The common narrative paints a picture of a flawless execution, a fintech juggernaut on an unstoppable trajectory. The contrarian take, however, suggests a high-stakes balancing act where macro pressures and intensifying competition could quickly turn the tide. This is not a simple buy-and-hold thesis, but a dynamic story of a company attempting to re-engineer consumer finance in real time. Drilling into the recent trading behavior, the intraday movement on Friday was a microcosm of the larger market sentiment. A strong open, driven by continued bullishness from the company's recent Q2 2025 earnings beat, gave way to a minor sell-off in the afternoon. This pattern is telling. The strong conviction from SoFi's last report, which saw them exceed expectations with an 8-cent EPS against a 6-cent estimate and a revenue beat, initially fueled a massive surge. This kind of explosive post-earnings rally is what every investor dreams of, and SoFi delivered it. The subsequent profit-taking, however, hints at a lingering skepticism, or at least a desire for investors to lock in gains. The volume remains elevated, indicating a high level of activity and interest, but also a battle between bulls and bears. On the one hand, institutional ownership remains significant, with major players like Vanguard Group and BlackRock holding substantial stakes, demonstrating professional conviction in the long-term story. On the other, the high trading volume also reflects the volatility of the stock, attracting both long-term investors and short-term traders looking to capitalize on every swing. The high beta of SoFi stock, currently at around 1.93, reinforces this notion of heightened volatility and sensitivity to market movements. When the broader market rallies, SoFi often outperforms. But when the market stumbles, the downside can be swift and painful, a risk-reward profile familiar to those navigating growth stocks. The core of SoFi's business model is its financial one-stop shop strategy, designed to build a lifetime relationship with its members. This is the engine driving its remarkable product and member growth. SoFi Invest, for example, offers a range of tools from active investing to robo-advisors, fractional shares, and even access to IPOs, all within a single application. This approach is a direct challenge to the fragmented nature of traditional banking and the specialized offerings of competitors like Robinhood, which primarily focus on stock trading, or Fidelity, with its deep-seated legacy in wealth management and mutual funds. SoFi's model seeks to capture the entire financial life of its members, from student loans and personal loans to checking and savings accounts, credit cards, and investing. This integration creates a powerful network effect, where a member using one product is more likely to adopt another. The company's recent partnership with NFL star Josh Allen to promote its SoFi Plus membership is a clear example of this aggressive marketing aimed at attracting a high-income demographic. The premium features, like unlimited access to financial planners, are designed to create a sticky ecosystem that reduces customer churn and increases the lifetime value of each member. The reality, however, is that this is an incredibly capital-intensive business. And while they've achieved profitability, the path to sustained high-margin growth is still being charted. The technology platform Galileo is a critical and often under-discussed component of the SoFi story. While many investors focus on the direct-to-consumer side, Galileo provides the infrastructure for other financial services companies, including other fintech players. This B2B segment offers a high-margin, capital-light revenue stream that diversifies the company's income away from its core lending business. In a rising interest rate environment, this becomes even more crucial as it provides a buffer against potential softening in loan demand and an increase in credit risk. SoFi CEO Anthony Noto has been vocal about the importance of this segment, and its growth is a key driver of the overall positive narrative. The company's recent Q2 report showed its financial services and technology platforms generating a significant portion of total revenue, a clear sign of their deliberate diversification strategy paying off. Yet the challenge remains to scale this segment to a size that can truly insulate the company from macro headwinds. The risk is that as competition heats up, from both traditional banks and other fintechs, the pricing for such services will be pressured, squeezing margins. The macroeconomic environment is the ultimate arbiter of SoFi's success. As a lender, the health of the consumer is paramount. A prolonged economic downturn could lead to higher provisions for loan losses and a decrease in loan originations, directly impacting the lending segment's profitability. While its company has been targeting a high-income demographic, no segment of the population is completely immune to an economic contraction. This is a point of concern for some analysts, with a handful of bearish ratings pointing to the potential for credit weaknesses and pressure on the company's net interest margin. The current consensus rating among analysts is a hold, reflecting a general wait-and-see approach. This contrasts sharply with the retail enthusiasm, which has fueled the stock's remarkable ascent over the past year, a return of over 240% from its 52-week lows. This divergence between professional caution and retail exuberance is a classic sign of an investment where the expectation and reality are in a delicate balance. The next catalyst will be the Q3 earnings report, expected in late October. The market will be watching not just for another beat, but for management's updated guidance and commentary on the consumer and credit trends. A strong report here could validate the bullish narrative and send the stock to new highs, while any stumble could lead to a significant correction. A fascinating development for SoFi is their plan to re-engage with the crypto space. The company's CEO has spoken about plans to reintroduce buy, sell, and hold capabilities for cryptocurrencies and even explore its own stablecoin. With a bank charter already in hand, SoFi is uniquely positioned to navigate the complex and evolving regulatory landscape of digital assets. This move could provide a significant new revenue stream and attract a younger, tech-savvy demographic that is increasingly interested in digital currencies. But it also introduces a new layer of risk and volatility. The crypto market is notoriously unpredictable, and any misstep could lead to significant reputational and financial damage. It's a high-risk, high-reward strategy that perfectly encapsulates the SoFi story. They are not simply a bank. They are a technology company building a super app, and the integration of crypto is a bold move to stay ahead of the curve. This is an area where SoFi is looking to create an edge over legacy institutions and even other fintech platforms, and it's a key part of the future outlook. The future of SoFi stock performance hinges on its ability to execute its multi-pronged strategy flawlessly. The expectation is that the company will continue its explosive member and product growth, leveraging its integrated platform to drive sustained profitability. The reality is that the road ahead is fraught with potential obstacles. The high interest rate environment, competition from every angle, from traditional players like Fidelity Investments and Schwab Intelligent Portfolios to upstarts like Robinhood and SoFi's own robo-advisor, and the inherent risks of a lending-heavy business model all present significant challenges. The company's ability to maintain its growth momentum and manage credit quality will be under intense scrutiny. It's no longer about proving they can be profitable. It's about proving they can be consistently and sustainably profitable even when the macro landscape gets tough. This is where the tension between the narrative and the reality is at its peak. The stock has been on a tear, and that performance has priced in a lot of future success. Now the company must deliver on those high expectations, quarter after quarter. The company's focus on a single unified platform for all financial services is its greatest strength, but it's also a point of vulnerability. The "get your money right" motto is compelling, but it relies on a high degree of user trust and engagement. If a user has a bad experience with one part of the platform, it could sour their entire relationship with SoFi. In contrast, a diversified approach with separate services, such as that offered by Interactive Brokers for trading and other services for personal finance, might mitigate this risk, but it lacks the same network effect. SoFi is making a calculated bet that the convenience and premium features will outweigh the potential for a single point of failure. In the end, SoFi is a company in a fascinating transition. It has shed the image of a speculative growth stock and has begun to earn its stripes as a profitable financial institution. The next chapter will determine if it can evolve into a durable, large-cap player. The company's trajectory has been nothing short of impressive, but the market has priced in much of that success. The current stock price reflects the expectation of continued strong execution. The reality that investors must grapple with is whether SoFi can continue to exceed expectations in a less forgiving economic climate and in the face of intense competition. The past is a testament to what they can do. The future is an open question. Comment below how many shares of SoFi you currently hold or if you're waiting for a better entry point. The journey for SoFi is far from over, and the story of expectation and reality will continue to play out with every market session.